If you think market moves are random, it indicates you don't know anything about the algo, because algorithm is the thing that is behind the every move. Every move. The role of the algorithm is to take the liquidity and rebalance the price. Because why should it take the liquidity? Because if there is no liquidity, there is no movement in the marketplace. If there is only liquidity, then only the market will sustain. So that's why the algo always takes the liquidity and rebalance the price. For example, what is rebalancing? Rebalancing means if only the sell side of the market is only offered like this in these conditions, the market should offer the buy side. So that's why the market will re-mitigate these inefficiencies. If you see these inefficiencies, these acts like a magnet for the price. These acts like a magnet for the price. So that's why the market will reach it. At any cost, the market will reach the inefficiencies of the price. That's why these are very, very powerful. The imbalances and the liquidity points are the very, very powerful things in the marketplace. For example, this is the weekly time frame. If you go to the 1 minute time frame, the same stuff works. The time frame is not important, the concepts are very, very important. So in this weekly time frame, I will show you some stuff so that you can understand. If you see here, this is the range, liquidity range. Always the market moves in the cycles, liquidity cycles. What does it mean? If the liquidity is not enough for the market maker, they will make the liquidity. They will induce the liquidity through the cycles, and they will take the liquidity one side and they will move in the real direction. This is how the market moves basically. So the same thing happened here. This is the accumulation, this is the manipulation. Always the manipulation will come from the huge speed and aggression. Always if you see the manipulation candles will be huge speed and aggression. If you see 1, 2, 3, 4, at least 8 bullish candles, can you see the bodies of the bullish candles? It indicates the manipulation, because what the retail or thought is, if the body is strong and it broke the high, you should buy, because they learned that it indicates the strong bullishness of the price. They should buy, but it's completely opposite. Those are the just liquidity for us and for the algo. So if you see, this is where the real order flow kicks in. After the liquidity grab, the real order flow will kicks. You can take entries there. See, now again, the sell side liquidity of the build-up has been taken out so that we can buy. Simple thing. We can buy the market, and also it has mitigated the imbalance. Can you see the imbalance from this candle to this candle? There is an imbalance, and also it has mitigated the imbalance. You can take the buys as the liquidity got taken out. Target this liquidity. See, exactly after the liquidity is taken out, the market again replaces the imbalance. There is a huge imbalance. The market again mitigated the imbalance, and again the sell-off happened. This is the thing, because the algo is behind the moves. Because it's just algorithm is behind the moves. Even the 1 minute time frame, the same stuff happens over and over and again. If you can understand how the algorithm works, you can take the moves. And there are some times you should not wait the market. You should understand, because you can't predict the movements at those times. Nobody can. Even ICT can't predict the movements at those times, at the peak news times, because there will be huge buying pressure or selling pressure in the marketplace. Nobody can handle. If you see here, after the liquidity is taken out, now can you see this break? There is a lot of difference between this break and this break, because if you clearly observe, for this break there is no order block from the left, but for this break there is a clear order block. So this can be used as the breaker block. This is the breaker block concept which ICT talks about. So this is the breaker block. So that's why market respected it and went higher to take this liquidity. To take this liquidity. It's simple as take this liquidity. Simple. So I will draw a horizontal line for this liquidity. It will be clear. You can buy the order flow. You can buy, and also here if you see, you can sell once this liquidity is taken out, because it sells a liquidity. and also there is no order block. You can sell. There is no point of buying the market in this zone because the liquidity got taken out. You can sell the market until the algorithm repriced. Here if you see, the algorithm got repriced and the bullish price action is suggesting by the algo. If you see here, the price is not even closing after the imbalance. It is trying to close after the imbalance. If you see here, the VIX, it indicates the market wanna go higher before reaching the downwards. So we should what we should do for the bearishness. We should just wait for the market shifts. See here, everything is liquidity. You can wait for the liquidity to be taken out and then you can play these cells. You can play all these cells. And also here, if you see, you can take all these cells. If you see here, after the liquidity got taken out here, the market exactly repriced. The market exactly repriced and mitigated the imbalance and it went higher. Simple thing. Again, the market took the liquidity. Now here, if you see here, there is a candle pattern, bullish candle, doji, bearish engulfing candle. It is the common pattern retail people will learn. This is the very important pattern. At every reversal, this pattern happens. Every mega reversals. Bearish candle, doji, engulfing candle. Same thing happened here and also mitigated. So this is very high probable candlestick setup after the liquidity graph. It is very high probable candlestick setup after the liquidity graph. So you can be sells here, you can take a sell here and target this next liquidity. Where is the next liquidity? I am just talking on the weekly time frame. We can replicate the same concepts even for the 15-minute or any time frame. No problem. So if you see here, the market exactly represents the algorithm after the liquidity is taken out. If you see here, this is where the imbalance is there. The market exactly tapped into the imbalance and reversed the price. Everything is algorithm, guys. Everything is algorithm. You can ask a doubt why this huge push happened. This is because of the 2008 crash. This is just because of the 2008 crash. That's why this huge sell-off happened. It's nothing random. At these heavy news times, the algorithm will work in the favor for the highest number of orders. When there are highest number of buy orders, the market will go up. When there are lot of selling pressure, the selling pressure will be a lot when there is huge crashes like this. So that's why the algorithm pushes the price like this. And also this is a manipulation. This is a huge manipulation. So that's why again the algorithm reprices the price here. If you see, the algorithm reprice. These act as a magnets. I told you that these act as a magnets. Again, if you see this push, why this push happened? This is also a huge event, huge economic event that happened here. So that's why this happened. This is also the same. Why this is? This is the corona crash. This is the corona. This is the time when the coronavirus came. Do you know this stuff? Why this happened? This is because of the news, Russia-Ukraine war. So in these types of situations, it's better avoid the trading in these high volatile situations like wars and viruses, etc. It's always better to avoid the marketplace because you can't predict the market as well. You can predict on the normal days because there will be huge pressure on the markets on the algorithm. If you see here, if you trade on these huge events on the news event, you will buy here, you will buy here, you will buy at this liquidity, but it won't work like that. It won't work like that. So that's why it's always better to stay out of the major news events, and you can play the small moves in the lower time frames. If you see here, every move is algorithmic again. If you see here, every move is algorithmic. Liquidity taken out, the market went up, and it's just order flow, order flow, order flow, order flow. Everything is algorithmic again. This is the range. This is what I talk as the range manipulation distribution. Range manipulation. Can you see the manipulation move here? This is what I talked as the speed and aggression. This is what I mean the speed and aggression is. The same thing here. Here speed and aggression. Here 3 candle bars taking the liquidity. Here if you see huge imbalance candles taking out the retail liquidity, and can you see the pattern? Bullish engulfing. This is what I mean the speed and aggression. But there is no sufficient liquidity for the marketplace, so the market again came and re-swept the liquidity. So doji engulfing candle, this is the entry pattern for us. The market took this liquidity, retail pattern liquidity. If you see the same candle pattern happened here, if you see this is the high of the build-up, this is the high of the build-up. Can you see the 4 consecutive bullish candles taking out the liquidity? This is all because of the algorithm. Even if you see in the 1 minute time frame, the same stuff happens over and over and again. And you can sell here, you can focus on sell, 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 sell until this liquidity is taken out. Simple thing. Until this liquidity is taken out, you can focus on sells. And why this move happened? Because after this liquidity is taken out, there is a clear order block. If there is order block just below liquidity, it is very, very, very high probable order block. Keep it in mind. And you can sell here because this is also a clean order block which is not mitigated yet. This is how we play the market from one place to another place. These weeks is corona, is because of corona. It is not corona news, it is some red flag news. So same thing, liquidity build up, everything is same. As I told you, for every high and low there will be liquidity. 1 second guys. Liquidity. Now here if you clearly observe the price, this is whole thing as a build up. You can use the whole thing as the retail build up. Now there is a clear order block just below the retail build up, right? See, this took the liquidity and again the price reverse. This happens, this stuff happens over and over and again guys. This is not a new stuff. The algorithm works the same way. If you see here 3 bullish candles, same thing like here, same thing like here. It is not random. It is not random because it is how the algorithm is coded. Again the liquidity is taken out, huge news taking the liquidity, and algorithm is ready to reprice it. There is huge imbalances there, so that's why the market is very, very much interested to get into this zone. Same thing like here. If you see why this reversal happened, because there is a lot of imbalances there, lot of imbalance. So what is the next zone to be market? Why the market reversed here again? There is lot of imbalance. That's why the market is reacting. We can expect for the market to take this liquidity on the upcoming weeks, or the market can go even lower and fill this imbalance. There is also imbalance here. It can fill the imbalance and then go up after taking this liquidity. This is how the market moves from the liquidity point to the liquidity point. If you go on any time frame, even the 1 minute time frame, the same thing happens over and over and over and again. I will show you. I'll go into the 1 minute time frame for you. So let's go to 15 minutes and let's come to the 1 minute. If you see here, I am just observing the price oscillations. This is the build up, right? This is the build up. Can you see this 4 candle which I showed you in the weekly time frame? This is the same stuff I showed you in the weekly time frame, if you remember. Here, same stuff. Liquidity, build up, 4 candles, 1, 2, 3, 4. Same setup. I'm showing you in the 15 minutes time frame. The markets are not random. It works under the algorithm. If you see it over and over and over and again, you can trade it flawlessly. And also avoid the news days completely. Avoid the big folder news days completely because it's not tradable. Those days are not tradable. These days not tradable. This is just gambling. If you do it, it's just gambling. But these days are bread and butter. You can easily predict the algorithm some days. There will be lot of setups. Build up, inducement, 3 candle inducement. This is the build up, right? Build up. Can you see these 3 candles? Why? Same stuff. This is the 3 candle manipulation plus there is another confluence, order block confluence. You can buy here. Target the next this liquidity. You can ride the trend. Again, same thing. This is the build up order block. You can sell here because can you see this build up? Huge build up is there. This stuff will become so easy if you practice the charts over and over and again. Any time frame if you see. Why this sell off happened? It's because the reason the higher time frame is heavily bearish. I will show you some entries here. This is one entry, and also this is the build up and you can buy here. This is how you can trade the markets from one place to another place. Hope you enjoyed this video. Have a good day guys. Peace.